booms and explosions, thousands of kilometers away, yet close enough to rattle Dalal Street. Shockwaves from the Iran war hit Indian markets this morning. The pre-open figures were unprecedented. A 900-point meltdown in the Nifty, a jaw-dropping 7,228-point plunge in the 30-stock Sensex. It was as if someone pulled the fire alarm before the trading bell even rang. An astonishing 8 lakh crore rupees erased in seconds. Portfolios collapsing faster than concrete under impact. Aviation stocks crash-landed, with Dubai, the world's second busiest international hub, shutting down, and Abu Dhabi and Doha disrupted, the east-west air bridge has effectively been shaken mid-air. Indian carriers announced mass cancellations on Gulf routes, their busiest and most profitable international corridors. For airlines already battling high fuel costs, this is turbulence at cruising altitude. Indian exporters recovering from US tariffs are again in the line of fire. Agriculture, especially rice shipments to West Asia, faces fresh uncertainty. Paints, tyres, chemicals and fertilisers are also feeling the heat as supply chains stretch and freight rates threat to spike. Infrastructure major L&T, with 37% of its order book tied to the Gulf, slipped 6% in trade, reflecting investor anxiety over regional exposure. As equities burnt, investors ran for cover. Gold and silver once again became the financial equivalent of a bunker. Silver surged nearly 12,000 rupees in trade, while gold climbed around 6,000 rupees. February marked the 7th straight month of gains in bullion, a streak not seen in 53 years. Meanwhile, the rupee felt the squeeze, dragged down by surging crude and capital outflows. The currency slipped past the 91 mark against the dollar for the first time in a month, prompting dollar sales by dealers on behalf of the Reserve Bank to steady the slide.
Crude oil prices will shoot up, gold and silver will go up, the currency vis-a-vis dollar will depreciate, capital markets around the globe will go down. The reason being simple, this is uncertainty, how this will pan out, whether it will escalate from here.
As the military conflict in the Middle East showed no signs of easing, crude prices posted their biggest overnight jump in 4 years, breaching $82 a barrel. European shares fell across the board on Monday, while energy and defense stocks jumped.
The Strait of Hormuz is of course one of the most important trade routes for oil. 1/5 of the world's oil demand is transported through it. And if it is now closed as a bottleneck, then that does not bode well for the oil price. From this perspective, the movements today are at least moderate for the time being. However, it is to be feared and very likely that the oil price will rise significantly.
The world is waiting for the situation to calm down. But it is clearly visible that this warfare will continue for quite some time, rattling the markets around the world. Bureau Report, India Today.